Welcome back. Well, as promised, let's get chatting with the management of SIS Limited. They reported their fifth straight quarter of declining margins. However, the revenues grew by close to 13% in the quarter gone by. We have Mr. Dheeraj Singh, the Group CEO of SIS, who joins in. Hi, Mr. Singh. Good morning, and thanks so much for joining in. Let's get straight to the margins. You have said that the decline, is likely to get arrested, and it was a temporary phenomena. Do you believe the worst of margins are behind now, and we'll see an improvement from here? If yes, to what level? Go ahead.
Absolutely. We believe that the worst is behind us. If you look at this current quarter, we've grown the top line in security by 8% and in facility management by almost 9.5%, 10%. If you look at the margin trends also over the past 3 quarters, SIS standalone has grown from 3.8% EBITDA margin to 4.1% and then to 4.6%. So we're already at the 4.6 and we are inching very closely towards the pre-COVID levels in the subsequent quarters.
4.6 is including other income, is that what you're saying?
SIS standalone income.
Yeah, all right. And if we just take a look at the international security margins, that have come off from what, 4.9% to around 3.3%. There has been a fair amount of minimum wage hike in Australia, etc. I just wanted to understand, what is a steady state run rate that we can expect for the international business margins?
So international business, there are two phenomena that have happened. One is it has seen an unprecedented minimum wage increase of 4.5%. And there's a lagged effect of that. We have to increase the cost, but the contracts and the pricing to the clients will happen in the subsequent next 2 quarters. So we hope the margins to catch up at that time. Okay. Secondly, there are a lot of pre-COVID COVID special contracts which had superlative margins. That obviously came out. But in spite of that, in this quarter, the international business has grown by 3.5% if you take the COVID contracts out. And there's been $25 million of new wins in this quarter itself.
Mr. Singh, you said that the standalone business, that's the India business, there's been a good recovery in margins. We take that, 4.5% odd. But, earlier it was at 6.5%. So when do we get back to those levels? And also on your international security business, the revenues are stagnated. 1,200 crores, 1,150 to 1,200 crores. Should we go with this run rate, or will there be an increase from here on? On both those 2 points, please answer us.
Yeah, so in India business, if you look at the margin for security, which is our main pillar, that has grown by 22% quarter on quarter, the absolute EBITDA. Similarly, the facility management is grown by about 8% absolute EBITDA. If you count the cash business also, that's grown by almost 25% on a quarter basis, right? So the India businesses are seeing a strong rebound on the EBITDA level, and we expect this trend to continue very strongly over the next few quarters.
When does it get back to 6.5%, sir?
I won't promise a date, but Q4 will see it coming very close to the pre-COVID levels.
All right. Q4 is when you look at pre-COVID levels of anywhere between 6.5 odd percent. That's on the India securities business. We take that point. But, while margins have reduced, what's gone up is the working capital. I mean, how much has your working capital days increased by? How much have they increased by? And will they go up from here further?
Look, if you see in the past quarter, the growth has been phenomenal. And with that, there's been some pressure on the outstandings. But we don't see it increasing further from here. Most businesses are stabilizing. In fact, there'll be a reduction in the subsequent quarters.
So what does your working capital days stand at right now? And how much do we expect them to reduce by?
So for different businesses, there are different levels. But on an average, we are targeting about 70 days for the group.
Right. And as far as the facility management business is concerned, the third quarter is seasonally strong for them. I mean, what's the kind of order run rate that you're looking at out here? And does it go beyond this 471 crore revenue every quarter? What is that business likely to grow to?
Absolutely. If you look at the September run rate, so on a quarter basis, now we have crossed the 500 crores mark, right? So for per quarter now, we should be run rating at a 500 crore, which is probably the highest ever by any Indian FM company in pure facility management services. And the Q3 and Q4 is got a very strong pipeline for facility management business. So that should only build on that.
Okay, all right, Mr. Singh. Well, we appreciate you stopping by and giving us those guidance. You're sounding optimistic. For me, the takeaway was worst of margins are behind and you'll see it improve from here on. Keep things safe and thanks so much for joining in and giving us all of those details. Well, we've completely run out of time on Chartbusters, but you stay with us. Trading Hour comes up next.